Hi guys, Randy back again here with another video. Okay guys, this today I have like a very important video for you guys. So I'm basically gonna show you how I trade the market. And guys, if you follow these rules religiously, well then say goodbye to blowing accounts, because like I think this is 2022. It's just time to start making money in this industry. Like I've seen a lot of people crying, a lot of mentors are teaching the wrong things. Like I'm giving this is my full strategy. Like there isn't nothing that I'm hiding, or like I'll tell you that nah. Obviously, like when I start with my mentorship, it's gonna be like it's always best to be mentored and to be shown like what to do and what not to do. But I guarantee you that if you just respect these rules and you're disciplined enough to like follow them religiously, like you say goodbye to blowing accounts. Okay, so rule number one: look for market direction. Okay, D1, week one, and month. Okay, the monthly time frame, which is actually M. Okay, find a point of interest. Okay, order block. Okay, number three, place 0, 50, 100% levels in the order block in the order block area. Okay, wait for price to mitigate to your order block and touch any of these levels with a confirmation to either sell or buy, and then you trade. Okay, the first target is always fib 0%, and target number two is fib 161.8. Okay, so with that said, I'm actually going to jump on the step index chart and show you what I'm actually go through all of these steps one by one. Okay, so now we are on the chart of step index. Okay, so this is the daily time frame, like on deriv, on actually the binary trading view. We can't go higher than the 24 hour, which is a daily. Okay, but I mean, look at price action here. Like price is actually at a very interesting area. Okay, if I switch to the lines, okay, you will see that price was making lower low, lower high, lower low, lower high. Okay, the Doe theory was going down. Remember, the Doe theory is active until the break of structure. Okay, so we made a low here. Okay, high and then a low, and then we made a high. Market fell to make a low, and then made a high, a lower high again, and then fell to make another low, and we broke structure. Okay, and there was a breach of structure right here. Okay, so now when this happens, you can no longer be selling, because like when price was going down, it was a healthy trend, lower low, lower high, and then we have a break of structure. Now you start thinking, like if this happens, then that means buyers are actually starting to join the party. Okay, so now you know the market direction. Okay, the market direction is basically like we were in a healthy downtrend until a break of structure. The market made a high, and now all we're doing now is a retracement. Okay, a retracement to find a new lower low in order for us to buy this market long term. Okay, so now we know what sort of things we're looking for. But since this is the higher time frame, okay, while the market is doing this, that comes with experience. While the market doing this, you can still be selling if you find order blocks along the way. Okay, I'll give you an example just now. Okay, now let me switch back to candles. Okay, so now, yeah, so now we know that we are buying long term. Okay, we are buying long term. Okay, now you look for your point of interest. Okay, bam. Okay, so now we are in the H4 time frame, and what does the number two say? Okay, find a point of interest. Okay, I forgot to put H4 here. Okay, H4. Okay, find your point of interest on H4. Point of interest is basically just order block, supply, demand, whatever you can call it. Okay, but I call them order blocks. Okay, so we have this right here as a point of interest. Okay, that's the order block. Okay, but this order block to me is actually being disrupted. Okay, I think it's gonna fall. Price will fall a little lower. Why? Because we have this major order block right here. And why is this order block like the most reliable one? If we zoom out, okay, if we zoom out and we place like a trend line right here. Okay, I don't use trend line, but I just use them for guide. But I don't base my trading my trading. I don't make my trading decisions based on them. Okay, so yeah, if you do something like this, we can see that price is actually going for a retest. Actually, let me look for that. Let me place that correctly on the daily time frame. Okay, Okay, daily time frame. We can do something like this. Okay. No, actually I'm wrong. If I do something like this, okay. If you do something like this, you see that's correctly placed, okay. We can see that price is now going for a retest, okay. It's going for a retest of this line, okay. And on that line, if you go to the 4 hour, you see an order block, okay. The order block that I just placed now, supply and demand, whatever you can call it, okay. And then yeah, now we're in the 4 hour, okay. Okay, so got my point of interest. There's number 3. Place 0, 50, and 100% level in the order block area. Okay, so how do I do that? Okay, I just take my fib, okay, my Fibonacci like this, and I place it from the high to the low of the order block. Okay, and then I place my 0% right here, my 50% right here, and my 100%. Okay, and my 100%. All right, and then I delete the Fibonacci to keep the chart clear, and I arrange this order block a little bit. Okay, now fine. So now, when price decides to get inside this point of area, usually I don't trade the 0%. Why? Because when you have an entry signal here, price can go up and then decides to liquidate back to the 50 or even 100% level before they finally go to your direction. So my most reliable level is the 50% area. Okay, if price drops to the 50% area and gives me some sort of like pattern, I'm gonna buy this market and then hold it to like my first target. My first target is usually the recent point I. Okay, so now what are we waiting for here? I'm simply waiting for market to get to this point of interest, and then when it gets here, I'm actually gonna buy the price. You know, I'm gonna look for confirmation. I'm gonna buy it and set my target around this area. Okay. So now remember what I told you. So now this is an impulse and this is a pullback. Now we experience, you can start trading the pullbacks as well. Okay. In this specific area, in this specific pullback, there's actually a really interesting one that I actually missed out on. Okay. So yeah, we have this order block right here. Okay. Okay, that's my point of interest, okay? Let me remove this line right here. And then place my 100%. Yeah, 50. And 0% right here. Okay. All right, so now I go down to the lower time frame. Usually 15 minutes is where I find my entry, okay? So now in the 15-minute time frame, let's look for some sort of pattern, okay, confirmation. It's usually an M or a head and shoulder, okay, after touching the 50. So now look, price went up in my point of interest, that touched the 50% area. See, touch the 50% area, engulfing, that's the first trade, okay. That's my first trade. Okay, stop loss below here. Like usually when I trade like this, I don't even put a stop loss because like, look at this, bro. Like there's zero drawdown. This is what you call sniper entry. Okay, and then price. Look what price did. Price just dropped all the way down. Okay, this was a quick trade. And remember, like this is step index. If you start with $10 and you're risking full margin here, like you open 3 position. By the time you get here, you're up like $250, $300. Okay. And then yeah, so this is a pullback example, okay? And then if you miss that entry, no biggie. Like there was a chance after a break of this structure, okay? There was another chance after a break of this structure, okay? So now price fell and broke out of this structure here. What you look for? You look for an order block again. See? Here's one right here. Okay. Price went down, mitigated back to the order block. In this case, it touched the 100% level and then it dropped. Okay, target number 1. Sorry, target number 1 is always the 100% level. Okay, in this case you would have made money. Okay, you would have made money again. Okay, and then if you miss that, Just wait for market to make a U-turn. Then in this area, in this case, it touched the 50% area, and then it dropped again. Okay. So now, if you focus, right? If you're really focused, you can start here with $10. Okay. You take this move, full margin, bam. Then from here you have $300. Okay. Then market break structure, you place your order block, then you take this trade again, bam. Now you up probably like $500. Then you wait for it to pull back again, and take this trade again, bam. You hop $1,000. Okay, in just one day. Okay, off of 3 trades. Okay, so you started with $10 here, you made $300 full margin. Then depending on how you're risking your money here and here, you would have been up like $1,000. Like the step indexes, the indices market, synthetic indices market, they move really fast and they're very volatile. So that's actually how you capitalize on this, guys. Like if you do this, like follow the rules, and you can see a change in your trading. And I'm not just saying this, like I'm actually gonna pick a random pair now and do the exact same thing, just so you guys see that I know exactly what I'm talking about. This is not just things that I'm picking up at random and whatnot. So now let me pick a pair. Like let me pick 75 for instance. Okay, VIX 75. Okay, let me pick VIX 75. Okay, let's wait for the price to load. All right, so now let me delete everything. Okay, bam. Okay, so now we are on the 4-hour time frame. Okay, we're trying to look for direction. Okay, daily time frame actually, searching for direction. Okay, so now look at this. Now price just it reached a whole time high point. Okay, and then now honestly, to me, this is still like a bullish market. Okay, until a change of direction. At this point, you can see that the market is still making higher lows. Okay, and now you just get your line from the low to the high point. All right. Okay, so now price bounce off of this whole time high. Okay, and you see here there was a break of structure. Okay, market was really high, bam, the broke structure. Okay, so now this is like this signals to me that it's a sell, but it's a short term sell, because overall the market is still moving up until a break of this structure here. That's when I'm going to start looking for a selling opportunity. But this sell here is temporary. Okay, so now let me go to the 4-hour time frame. Okay, if you go to the 4-hour time frame, you can already see that things are starting to look a little bit more clearer. Okay, now we have this order block right here. Order block is our point of interest, remember. Okay, so you place a 100% level. Okay, 50 and your 100 and your 0% level. Okay, but in this case, this would have been this would have been tricky, because here there was liquidation. Okay, they tried to liquidate. Okay, so now once I have this, I go to 15-minute time frame. Okay, once in the 15-minute time frame, remember you need to wait for price to touch the. Okay, so like in this case, I would have sold here. Okay, price, I would have sold here already. Okay, this would have been my first entry. Okay, you see, this is an example where it did not work out, but it worked out in the end still. Okay, and this would have been my target. Okay, bam, the market goes in my direction, and then it goes up a little bit. Then you see this is this is a retest of this order block right here. Okay, so it's like if you missed this entry, you could have taken this as well. Okay, then boom, I got stopped out. Okay, you got stopped out, but don't lose hope. Like whenever you get stopped out like this, don't just think like, okay, oh, the market went against me, I blew my account. No, just wait for like read price action, wait for like what's gonna happen next. Okay, chances are this is just a liquidation. Okay, they push the price a little higher. Like I've noticed with VIX 75, they do this a lot. Like they liquidate a lot before they actually take the market to the initial direction. Okay, and they went up like this. Okay, so now they broke the 100% level. They came back to it. This is where I usually like place a trend line. This is like a different type of entry that I do as well. Okay, a breach of that can also be an entry. Okay, so this could have been an entry as well, but this is a risky entry because if you enter here, chances are the market will pull back to this area before another fall. Okay, so now let's place this order block here. Let's see what market does after this. Okay. Oh crap, sorry guys. Okay. All right. So if you take that entry, you need to have a big account. Like you need to have $100. Probably risk like 50% of it, just so you don't blow your account if it ever reverses to this area. Okay. So now look at what price did. Bam. Okay. And if you place your 50%, you will see that. If you place your 50%, you'll see that price will bounce exactly at that point. Okay. If the next candle is red, that's my signal to enter. Okay. Bam. That's a red candle right there. That's my entry. Okay, entry, place my entry right here. Okay, stop loss just right here, and then my first target will be somewhere here. Okay, now let's check what price did. Bam, in the money. See, price just dropped. Price just dropped. And dropped and dropped. So this is where we are currently. Like this would have still been like an active trade. Okay, this would have still be an active trade. You see, so TP is gonna be hit really soon. Okay, but in case you missed this, okay, in case you missed this, while the market is doing this, there are plenty of chances for you to actually join the price again. Okay, I'll show you an example. Okay. Let me just remove this. Okay, so you see this is a structure break and this formed like a head and shoulder. Okay, and then this was making a retest of this area. Okay, but then I don't just like trade a retest like this. Like I need to look for like an order block or something. Order block or support demand area. Okay, in this case there was nothing here. You see there was no demand. The only order block I had was all the way up here, and I knew that prices is not gonna retrace all the way up here. So let's find this order block. This is now when the experience comes, you're gonna start doing these things. Okay, then I go to the 30-minute time frame, and I did not see anything. I think. Okay, 30-minute time frame, the order block got a little bigger, but still, like to me, is like nah, they're not gonna come back all the way up here. Okay, so let's check that 1 hour. What's happening in the 1 hour? Okay, in the 1 hour, you see now this is where they got a lot clearer. So let me just remove this. Okay, this is where things got interesting in the 1 hour time frame. Okay, I'm gonna remove all these zones. Okay, so in the 1 hour time frame, I found this baby right here. That's an order block or a demand area. Okay, so then you mark it like this. Remember, 50%. I mean 100%, 50%, and 0%. Okay, price dropped, mitigate it. Okay, just touch the 50. Like guys, these are the sniper entries, bro. Like when you do this, they are zero drawdowns, and when there's zero drawdown, this is the type of trades where you risk your full account. Okay, like I have a risk management plan that I'm only gonna share when I start with my mentorship. Okay, that I'm not gonna divulge now. Okay, so price touch the 50%. Okay, as soon as it touched the 50%, next candle closed red. That's your what? Your entry. You enter again. Okay, so like you would have had entry number 1, entry number 2, entry number 3. Okay, and also remember, I also have this trend line entry that I do from time to time, but like remember, this is a risky entry because if you enter here, chances are they might pull back here before they drop. Okay, and then you got your fourth entry right here. Okay, and then look at what price did. Price has been dropping ever since. So now we are nearing a our TP. Okay, this is our first TP. Okay, and actually look at this sometimes tomorrow and you will see that TP would have been hit. Okay, and then remember, this move right here is, to me, is still it's a pullback of the overall move. Like, this market is still a buyer's market, okay, until a break of structure. If that structure breaks, that will confirm that now we're switching biases. Okay, now we are entering a seller's market. Okay, so as for now, to me, this is just a mitigation. Okay, and price can even break lower. You see, it can fall even lower here until here to this trend line. Then it decides to bounce back up. But if it breaks this line, then we're switching bias. Okay, now I delete everything and I redo my analysis to actually have to find the right perspective, the right direction. Okay, so guys, remember, I'm gonna end this video here. Remember, guys, here are the rules. Follow these rules. Take a screenshot of this, write it down, and go back to price, back test, back test, back test, back test. That's how you're gonna have confidence to actually start trading these things. Okay, that is it for me today. This was quite a long video, and I try to keep it short. That way you watch it and you watch it again, because when it's too long like this, it's actually hard to rewatch. I mean, but like, if you want the knowledge, then you do not have a choice but just to stick here and watch this. Okay, so this is the end for this video. Please like and subscribe, and I'll see you in the next video. Peace out.